Good morning. This is Rob Carrig with Carrig Wealth Advisors. Today is Monday, November 18th, 2024. And I thought we would do a brief market update post-election, talk a little bit about some historical perspective using some information from our friends at JP Morgan Asset Management, and then also a little bit of an outlook on positioning going forward from our friends at BlackRock. And let's see, share. Okay, what I'm going to focus here on today is this chart that's from JP Morgan and consumer confidence by political affiliation. So I'm going to start down here. Under 8 years of George W. Bush, the S&P 500 returned a negative 4.5% per year. So compounded negative at 4.5% for 8 years. Then under 8 years of Obama, the stock market compounded at a positive 16.3%. Then 4 years of Trump, a positive 16%, and not a complete 4 years of President Biden, but this number is at 13.2. If this was more updated, this is as of September 30th, that number would probably be a little bit higher. So point number one is that the stock market can do incredibly well or struggle, regardless of whether the president is a Democrat or a Republican, but it's always a good reminder. The other point that this chart is trying to make is you can see it's consumer confidence by a political affiliation. So this is the info up here. So let's go to those 8 years of George W. Bush. Under those 8 years, people that are Republican or lean Republican felt very confident at times about the economic conditions. Meanwhile, the stock market had an incredibly difficult 8 years. That sort of flip-flopped when Obama came into office, and then flip-flopped again big time when Trump came into office. So the point I'm trying to make here is I have many clients that are uncomfortable or uneasy or weary about the political state of affairs in this country, and I get that. But stock market did just fine under Trump's last 4 years. Stock market can do fine whether there is a Republican or a Democrat in office. And the stock market can do fine even when your own political party is not in office. Even though things might not feel great, they might feel even worse to those folks. Historically, things can be just fine as far as the S&P 500 goes, regardless of who is in the market, rather, who's in the White House. So that was the main point. The other thing I wanted to mention is that our partners at BlackRock, which we rely upon heavily for investment direction, they have sort of leaned in, so to speak, to this Trump presidency. I'm going to just read from some of their recent commentary. For a lot of their portfolios, they're adding to stocks to increase their overweight in stocks, seeking to ride a potential post-election, quote, risk-on relief rally into year-end, and lean further into a preference for U.S. stocks over international stocks, specifically targeting U.S. stocks with strong recent momentum. So many folks have asked me, what do I think? What do people think? And it's a interesting time in our country, but I will say that an environment of lower taxes likely and less regulation likely seems to be friendly by those that are in a position to make these decisions to U.S. stocks. Hopefully this is helpful. If I can help answer any specific questions, please don't hesitate to get in touch at rob.carrig@stewartpartners.com. Thank you.